Good morning. It's E from MarketWizards.com and eMiniWizard.com, and it's the 30th of December, 2020, just about 20 minutes after 10. And I'm reminding traders to use risk capital you can afford to lose. All right, just want to take a quick peek at the markets, show you one of the newer uses. I've put together a quick script for IB, and I programmed that to show us the high and the low and the range with the middle. You can do this with your spreadsheets, but I also like to keep exploring some uses for the widget. And I've got yesterday's IB over here. So again, I've got this marked at the low from yesterday from IB, and we know that this is a pretty important line right now that's trying to be defended. This 24, we had talked about that. So if we're looking at today's immediate range for IB, this will show that. And then if you just program it correctly with the time component, it will stay there and just anchored. And then you've got it for the rest of the day to see whether you have a breakout or a breakdown. And it's pretty simple script for that, which I'll be more than happy to give you guys in the room if you're looking to use something like this little tool. Let's take a quick peek at a couple other ideas. And in this chart, I'm using the same script, but I use a little different formula. And instead of it just being time, I'm basing it on using a fixed number, which would be yesterday's close. And obviously today's open. And then plot the half gap as the middle. So for those of you who want visual, this is an easy way to do that. And obviously, all you're looking to do here is give yourself an edge to remember. A simple way, obviously, just draw a line on your chart to show you that. But for those of you who want to remember these type of things, this is an easy way to plug that in as well. Very versatile tool. And obviously you're plotting the the open and prior day's close and then the midpoint. And supposedly 82% of the time used to be a number that was thrown around by Carter and Hubert Centers, and they found it had a high rate of closure. I think the last few years it's probably not as high, but certainly it's still a reasonable trade. And we said today, let's use that idea as our support, this half gap. And because we opened the day at 25, we want to make sure we were paid coming into the 26s, 27s, the middle for the day's range, pre-market. And that holds true now as well, that this is our assumed, try to keep these shorts from getting any posture short side. So squeeze until it isn't. Anyways, I'm just trying to show a couple of versatile uses for some of these tools. I had suggested early this morning that we use, let's figure we are in an inside day and let's use the yesterday's range and plot the 2-day range so that we can see where the likelihood is that we will trade for now. And we said let's use obviously the highs as resistance for now, and we're going to use back here this 22 zone, really an important idea today to hold this zone, just below that 24 area, to keep this the shorts from getting posture short side and taken out and coming back into this territory that has not been traded. So I think as the market thins out, you just need to be very conservative with your expectations if you're trading at all. So for now, the biggie is can this 24 to 25 with a 22 support right below it, can that hold? And if you're trying to come short side, don't think big trade because truthfully, they can move this thing anytime they want, especially on news events. But for now, I'm thinking range type trading, risk two, make two. And here we can see obviously the days range. 36 and a half is the demon today. That's why I should be paid by that. Note we've got about a 10-point rotation there. And so far, this is obviously the support that the longs are trying to defend back here. And you can see it. Just put a line on your chart and you can see it. That's a double. And that's why we wanted to make sure you're paid coming into that 27 pre-market. And this is our weekly chart. We note how this 12 has been our support, still is until proven otherwise. We've obviously got this top zone up here, which would be above that 38, and that's why we like that as our resistance initially. And obviously the support, you've got to get it under this 29.75, 30 area and stay here. So for now, this is our support zone trying to hold. This is our fighting box, and then this is our resistance box. Keep it simple. Angels and demons, note the double we talked about here. Note that how this works out nicely. This is your demon right here. And note how we stalled right there. And we're really trading in the upper half of the range right now. That's all we know. Spent a lot of time up here. We need some time to come through, if at all. Don't forget, we're into the end of the um, year, end of the quarter, end of the month. So there'll be some jockeying around. Here's your 3-minute chart. Keep an eye on this. That's the one I'm using right now. Got to bust this 27, 28 area to come back down and get in here. And for now, this is just a walk in the park with very low volume. Here's your monthly. We talked about this. And theoretically, this should be up here. And this is our fighting box. And this one so far was abandoned. And we can see these relationships right here. This 10 to 12, very important support. Obviously, that 50 zone as resistance, 52. We've got the 52s to 56, we said, as potential targets that have not been achieved, and higher, but those are the next ones. So we'll keep an eye on the day and see how this progresses with news. I suspect that there's positive news that comes out that we still can come up and take out the overnight high. And I'm using a 30-minute here, and I said we can also, and you can see over and under, and you can also use a 15. I like the 15 today too. Okay, so as long as we're above the rain line, we're kind of positive and we're over and under. So I wouldn't read too much into this other than we've had one heck of a push, and year end, anything goes. If there's a crazy news event, we could still make one more new high. We have not really had retest failure yet. That was yesterday's high as a all new high, and we still have not challenged that. We've had this great big push down, the second thrust, and then we've held support and trying to bounce. So for now, all we know is that the shorts have had a terrible year trying to defend after 3 weeks. A killer trade short side. It's just been bounce, bounce, bounce ever since. And here's our daily predictive. We can see that this zone right here, this 40 and a quarter to 30 and a half is being resolved. Basis the predictive. We've got 37.11. We've called that 37.12s. That's very important support basis this idea. And right now, these are the three boxes that need resolving. 30 big 37.50, a major pivot. And then obviously the lesser denomination. So this 20 zone for now, and I'm suggesting again this 22 to 20 support until broken. That's got to hold. If that lets go, then we can obviously challenge yesterday's lows and even back here. So no one knows. And in a heartbeat, with very thin volume, we can get a quick move. I would not chase anything, and I'm just trying to review for you guys so you get a look at the different charts that I look at and the things that I think are important to help you get started for next year in the right direction. And let's end up on a chart that some of you guys love, volume profile. And again, I have no issue with volume profile. I think it's a great system that's been put together. Was one that I was not brought up on and didn't learn, and so I'm still trying to add this to my repertoire. But some of the other charts that we never post for the public, obviously, I won't put in this in case I'll keep this sanitized in case I want to put it out there. But some of the other charts I post in the room, review those. Those relationships are absolutely amazing, and you will see just how effective it is if you will think in many different dimensions. Don't just think, one way. Don't be a one-way trader. You'll get killed if you do. There are going to be times when we get one-way thrust, but usually we'll get contras. And if you get too biased in one direction, I think it hurts us. So for now, still using the same ideas that we've had earlier. We're trying to resolve obviously yesterday's range and then bring it down, tighten up the range, and then just look for your smaller range inside the bigger range. And if you keep bringing the ring size down to a smaller size, then you can at least play hit and run. And there's no shame in being a good putter from 2 feet out, knocking the ball in hole 2, 3, 4 footers. If you're ever going to be a good golfer, those are the putts you have to make with consistency. And I'm talking about 7 or 8 out of 10 times, not once or twice. And obviously, it's easier to knock those in than it is the 10 footers and 20 and 30 and 40 foot putts. And trading's the same way. So hope this little video helps you get a few ideas as to what I'm looking at. And I thank you all for participating this year in our room and sharing your ideas. And it's been a blast. So I wish you all the best for the new year. Anybody that is short side looking at that 29 to 28 paid for sure. Give yourself a little room. You may leave chips on the table, but who cares? Get something out of the swings. All right. Be well, everybody.